the Florida market is so messed up. I want to feel like I'm exaggerating, but frankly, we're at like the lowest number of sales.
What is going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing podcast. If this is your first time to the show, this is a real estate operator show for real estate operators, made by operators for operators, so you can continue to grow and expand your business in this ever-changing market. I am Mike DeHaan here with my typical co-hosts Dan Austin and Dylan Cook, and today we have a special guest, Jon Brooks, out of Jacksonville, Florida. Jon is a very successful real estate, brokerage owner down there, an agent, and you're a good buddy of mine from GoBundance, and you have really great opinions on the economy and real estate and everything else. So we will have a really fun discussion with you today. You want to give a quick plug/overview of kind of what you're doing down there in Jacksonville?
Yeah, I own a real estate brokerage with my wife. It's called Momentum Realty. We've got about 250 agents who are just crushing it in the Jacksonville market. We're very focused on economic data, education, and wealth building for real estate agents. And the sky's the limit. I mean, we started in 2020 during COVID with 0 agents, and now we're the number 2 independent brokerage office in the area, and it's one of the largest MSAs. So we're very excited and blessed to be where we are today.
Sweet. Yeah. And you've been, I would say, are they still crushing it with the way Jacksonville's going? Or is that like, a thing of the past?
That depends on the agent, Mike. Some agents suck, and it's usually like the bottom 70% are awful. They're part-time. They don't produce enough to actually guide somebody through a transaction. They put everybody else's licenses at risk because they don't answer the phones. They don't communicate appropriately. And then there's your top 20, 30% who are really good. And then there's the top 2% that do most of the sales. And that's just how it is in the majority of markets. So those top 2%, guess what? They're still kicking butt. They're relaxing. They're coasting. It's that bottom 70% that had all those fish jumping in the boat 2020, 2021, even a little bit at the beginning of 2022. They actually have to work hard now to earn a commission check. So yeah, we are seeing things kind of deteriorate on the ground pretty rapidly. But again, the top people are always going to continue to slay because they've got the habits that make them successful in the first place.
Yeah. And you're seeing that in every industry, right? Like real estate, plumbing, freaking you name it, you're going to see the same patterns there. It's getting bad when I literally have had HVAC guys that have worked for me, reach out asking if I know of anyone that needs HVAC work, right? That's always been the one thing that seems to be tried and true, especially in the Northwest where it gets pretty cold. Not anymore. Apparently, they're all starving to death just like everybody else.
I posted, as a quick aside, I posted in a Facebook investor channel that I was looking for contractor work for because we have 4 or 5 projects coming up and I need to expand it. My phone blew up for the next 48 hours. I just had to turn it off. It was awful.
Yeah. And since they were all contractors too, was it in all caps and a direct run-on sentence?
That's pretty on brand. I did say, I'm going to make you send a W-9. I'm going to ask for references. You're going to have to show all that. And so that probably eliminated half the people.
90% of them.
Yeah, at least.
Gone.
Yeah. But no, that's funny. It's a time. Sign of the times though. So with that Florida market, Jon, I know you're a big economics guy. Dylan is as well. Usually how the show kind of goes is Dylan brings us headlines that he wants to talk about, and we just poke holes in it with our very uneducated opinions. But this Florida market, I've been asked by several people about why it's going so poorly. And if you look at it from a high level view, fundamentally it makes sense, but I guess if you're looking at specifics with all your research and reading and everything that you do, why is Florida really having a hard time? And is it all of Florida or is it really just Jacksonville?
It's spreading everywhere. We're a top 10 brokerage in Gainesville too, all the way down to Palm Coast, Orlando area. And it's everywhere. You can't hide at this point. We could literally talk for 2 or 3 hours about why the Florida market is so messed up in the history of boom bust periods, but just to give you the top 3 influences of what's going on from 2020 to 2024, we had this huge influx of people relocating to Florida from high cost areas with a ton of cash buying up properties, and the builders to meet that demand just built like crazy. Of course, they got over their heads and over their skis thinking that the COVID demand would last forever. It didn't. Now we have a ton of inventory, phase 2, phase 3, phase 4, beautiful homes just stacking up, now selling fire sale prices of $150,000 off, with buy downs from 7% down to all the way down to 4% to move this inventory to get their cash back. So, we had a speculative bubble from investors and from people relocating here. The investor situation started in 2014, where we had these large hedge funds come into the state and just start purchasing, 2,000 square foot homes, 4 bedrooms, 2 bath. And they were buying up 40, 50 of them a month, every single month, making the supply really tight. And then once 2020 hit, March 2022, when the Fed started raising rates, they pulled out. So 35% of purchases were from investors and second home buyers.
Wow.
There's no investors or second. I mean, there's very few. I mean, they're out there, but it's not anywhere close to that. So when you have that sort of demand drop on top of the supply coming on, it's like just a perfect setting for catastrophe, to be honest. And I want to feel like I'm exaggerating, but frankly, we're at like the lowest number of sales. We look at pending sales this month, year over year versus last year. We're down 34% for the month of April versus last year, which was down 20%.
So what's that relative to, I guess, Dylan, you're a smart guy. What are the sales in the Ohio market? Like, do you guys have a decrease in sales?
A decrease in sales.
I'm just curious.
Like the volume, but our actual price is about even with what it would like year over year. And our days on market is still like in my specific MSA is still below 30.
Wait, Dylan, people say that real estate goes up every single year, 4%.
That's not the case. Not the case. But I mean, we're steady and not declining. Like I feel like a lot of other markets are.
Right. Yeah. Washington's quite similar, but I don't know. I don't know what our days on market are, but like we've declined, I think, in price. Sales have gone down a little bit, but it's like feels kind of average strong.
Our days on market at the beginning of May was 35.
Yeah. So pretty solid.
So pretty reasonable. Yeah. I mean, and we've been selling stuff with multiple offers in the first weekend still, if they're nice properties.
There's only like what's the metric? 1.5 months of inventory right now in Cincinnati. Like that's still pretty dry.
That's pretty good.
Yeah. See, we're up to 6.4 months, and our inventory per month is going up like 1,000 homes net per month. The only reason why you don't actually see it higher is because thousands of homes are expiring and haven't yet come back on market. So we expect by August through the end of the year, these properties will come back on, and we could see a supply of 12 months supply of inventory by the year. That might be a little extreme. Maybe I'm overshooting it, but if the trend continues, it will be that. And we will be in an official kind of more of a correction and more of some sort of crisis as people will be stuck into their homes and start doing foreclosures and short sales.
So is this a good time to buy in Florida? Should we be buying in Florida? I mean, or no?
This is the worst time in history to be purchasing in Florida. And I'm saying that as like a real estate brokerage owner. If you're buying now and selling in the next 2 to 3 years, you're going to be underwater with the transaction fees, definitely. But if you're planning to be here for 10 plus years, I'm not sure it's going to make that much of a difference for you if you're comparing it versus renting. But if you're a very short-term player in the market, then I would probably hold and wait and rent for a few years before purchasing, which hurts to say, but it's the truth.
Wow.
Yeah, that's valid. So like as a real estate business owner, right? Like you're a lot more than a realtor, but you have all these people that are on your team and, you're doing something a lot bigger. How does like this sort of economic situation affect the decisions that you're making at like a higher level? Like are you like pushing for growth, or since you're a brokerage owner, are you still trying to recruit agents even though there's fewer and fewer agents to recruit from? Are you trying to like expand in new markets? Like where are you pivoting with all this?
I used to own more than 200 units, sold the units from apartment complexes, sold 17 single family rental properties, got in cash, and then started lending the money out because my return on equity on my real estate portfolio was like 2 to 3%, which sucks. And so I just sold it. Once I saw March 2022 come around and rates starting to go up, I know when rates go up, asset prices backed by debt go down. And so it's quite obvious to me to sell at that point. So I started working really hard to get my tenants out of the properties and start selling them. Very happy I did. The stuff that I was selling, I'd sell it for like $450. They're now trading for $380. So I'm happy that I made the decisions I did when I made them. But in terms of the real estate brokerage, we cut expenses, right? We're getting really lean. We're making sure that we're only partnering with producers with growth mindsets. We don't want to be around the people who are negative and just crying around the water cooler all day. And we're thinking long term. We're thinking, how do I set myself up for success for the next decade, right? We used to be thinking like, what's my goal for this year? What's my goal for this year? What's my goal for this year? It's like, hey, what are the right moves to make for the really long term? And how do I position myself now that I have cash? I didn't have, like 10 years ago, I had no money. So now I have money. So how do I protect the money that I do have? And then how do I get the agents who don't have any money into production as soon as possible and skill them up for short sales and foreclosures and creative financing solutions that other brokerages, frankly, aren't teaching because their leadership don't know, or maybe they're scared of it. And so we're like we're one of the best positioned brokerage for a downturn because we're super affordable for the value that we provide. And our leadership team just has way more experience from an investment standpoint and from a market standpoint than any other brokerage leader in our local market, hands down. So it's really easy for people to make the decision. We grew like 80 agents last year, and we're on track to grow another 80 to 100 this year. And the agents who join and show up and participate, their businesses are growing. And we still have some agents who are having the best year that they've ever had, from a profit standpoint, because they took our advice. They're getting lean. They're getting rid of the stupid stuff that they were paying for. They're focusing on the key variables that matter and move the needle in their business. And they're, ignoring all of the noise. And so I think this is a really good time to reset your business model if you were a little bit out of control, which a lot of people were out of control the last few years.
Yeah. And I think at its core, the thing that you said that you're focusing on there is providing like good service, right? Like when time gets weird, people have choices. It becomes a buyer's market in everything, not just in real estate exactly itself, right? But people are going to want to go to people that provide the best service and the best experience, whether that's as a real estate brokerage or a trade company, or I was just at a meetup in Las Vegas at acquisition.com with Alex Ramos's crew. And I met a guy in the time of the recession, right, where people are spending less money on whatever, that is taking home $1 million a year with a one location mini golf facility, right? And it's because he focuses on service, right? And he focuses on getting good reviews and doing everything he can to give people the best experience possible. And so when people are deciding what they're going to do on a random Saturday afternoon, they're going to go to the mini golf place that's awesome, that they know everyone's going to have a good time. Right. And people are going to be more selective with their dollars and how they do business. So you can do well in everything, right? You just need to be leading from the front and not kind of trying to squeak out like a little bit extra here and there at the expense of your longer term.
Maybe that's a good thing in our mainly wholesaling businesses where everyone came out of the woodwork from 2019 to 2022. And I don't know, the people who just simply can't cut it, they'll be gone.
Well, totally, dude. It's the same thing. Exactly. I mean, we got a deal recently where the lady was talking to 6 other people. Do you want to know why we got the deal? Because we were the only ones that showed up on time and said we were going to do. The other 5 were late or no-showed. Easiest deal ever.
Which is crazy, because I know they don't got that many leads.
No, of course.
Especially if you're paying $250 a lead, they just wash that down the drain.
Totally. The barrier to entry gets smaller and smaller as technology and stuff increases. But I would say like the level that you need to be at to like just beat everybody continues to get small as the barrier to entry gets smaller, right? Because you have like the more C players that will come in and just try to piecemeal some bullshit business, and then all you have to do is literally just do what you say you're going to do. Right. Like even my wife, she's an artist. She has like the most easy to dismiss product when the economy gets weird, right? People aren't going to spend excess money on art if they don't need to. She's currently like crushing it for the first time in her life as an artist because she has all these stores that are wanting to like sell her stuff. And she's the only one that is answering the phone and fulfilling orders in a reasonable time period. It's insane.
So simple. It's so simple.
And it's funny watching her go through this part of her entrepreneurial journey where now she's like, they were carrying all of this other guy's stuff, but I guess he just like isn't delivering on time. So they're calling me and now I'm filling up their store. I'm like, that's how easy it is. All you got to do is just do what you say you're going to do and you can make a lot of
the bar is a lot lower than I think non-business owners think.
Oh, totally. Yeah.
Much
100%.
lower.
So
John, you mentioned something about teaching and coaching your agents about short sales and foreclosures. I'm just curious for the audience standpoint too, as well as for me, how do you do that? Like how do you build like a agent business based on short sales and foreclosures? We saw that kind of pre-2008 or post-2008. A lot of agents did really well doing that. Is there like some trick like lead gen that you go off of on that stuff, or is it really just navigating the difficulties of dealing with fucking banks?
Yeah, it is difficult. It's definitely not easy, but if it's the only way to make money and that's where it is, you got to go to where the money's at. So foreclosures specifically are a lot more challenging because you need to network with asset managers at bank and you need to be, assigned the REO properties, and that it's relationship building. And usually they hire, their cousin or their friend or a family member to be the agent to sell it. And then of course they go to Bahamas and do some back dealing.
Of course.
Whatnot. Yeah, exactly. I literally think that's like 95% of it. Like it's a pay for play type of thing, where they're finding a creative way to get kickbacks. And the short sale side is really where you can get a lot more business, because a lot of properties now, if you bought in 23, 24, 25, or in 22 in a new construction neighborhood that has multiple phases, you are currently underwater on your house. The DTI ratios, the debt to income ratios of some of these people is just like crazy. Like 63% of borrowers are over a 43% DTI ratio. So they're underwater. They barely have enough money to pay the mortgage. And so it's just one of those things where short sales are going to be popping up everywhere. So what do? We bring in a short sale attorney. We teach them. I used to do short sales when I was producing from 2016 to 2019. I was a top agent and I did a bunch of them. And they just take longer. It's a lot more paperwork, but you just work with the seller, identify what their distress is, get the package from the bank that they have the loan with, and figure out what they need, submit it to them, and then get the house on the market, start bringing offers. So, I mean, it's not a rocket science thing. It's just a lot of paperwork, and you need to work with sellers and educate sellers on how to do it. So if you can stack them up, you can stack up enough of them, eventually you can have a really nice business. There's some agents, from 2010 to 2012, that's all they did, and they were still making $1 million a year. It was just painful, and they had to have like a really good follow-up system with the bank so they didn't get lost in transition.
Yeah, it's funny because you're basically being a wholesaler right now.
Pretty much.
It's just your exit. It's going to be a little bit more legit because you're licensed and you, I guess, go on the market at the end of it, right? Versus what we would do is we would go and try to find an investor that would buy the house at a steeper rate. But when you're doing those short sales, so I've never done one. I'd never been around when that was a thing. Like I started buying properties in 2018, and I was like at the very end of REOs, right? Where you saw bank owned stuff. That's how I started buying flips. The cycle time on those short sales, like I said, it's very painful. Like, what is a realistic timeline? Are you looking at like 6 months for the bank to do like its whole committee review process before they even explore doing a cut? It has to be somewhat significant for them to walk away from like of such a significant loss on paper.
Yeah, first the seller has to prove that they're in distress.
Okay.
Then they have to submit all their financial documents to the bank. And during this time period that you get all that information to the bank, you also have the property listed as short sale. It's not short sale with price approved, but it's listed as a short sale property. There's separate addendums that you have to use for those, but it can take 6, 12, 18 months. These asset managers only look to review this about once per quarter. So if you just miss that quarter, you could submit the package and not hear back for 2 to 3 months. And that's a really painful place to be. So you also have to educate the buyer, like, hey, this could take a long time. And then the bank may not approve your price. The bank will usually come back with an approved price. They'll usually do some sort of BPO, broker's price opinion, or an appraisal, and they'll determine at their asset management meetings. They basically all just sit down and look through all their packages and say like, oh, like what would be the price we'd be comfortable to take a haircut on this deal. And then they get the bank approved price. Sometimes you have to go through multiple buyers because the buyers fall out. So you need a buyer that's willing to hang on for a long period of time. The problem with that is if they get it under contract for one price and they get it bank approved and then the market continues to move down, your buyers can fall out during that long time period of waiting, or they can find another house to purchase during that time period. So it is a little bit of a game, and it's not fun to play. But I have a feeling that's going to be the next wave of opportunity for real estate agents to create a consistent business. Or, we have a property management division as well. So one of the reasons we started that was because we saw properties would be underwater, and those owners would have to find a way to get out of the situation. If they don't want to short sale it or can't come with cash to close, they can refer it to our property management company, and we can go out there and manage it for them. And maybe it's better to just lose $200 to $300 a month, for a decade than to take
Jon,
the big hit now.
I got a question that revolves around this, and I'll start with the premise, and you say if you agree with me. I think a lot of the asset price appreciation we have in real estate, stocks, basically hard assets, has come from a lot of the printing that the Fed did basically post-COVID. I have the opinion that if things go south, that they're gonna have their own put again. I think they go back to quantitative easing. So is there a world where that happens and then all these short sales actually don't happen because of them pumping money back into the economy? We just rinse and repeat and do the same thing all over again.
They can't. We're at a credit crisis. The consumer is completely tapped out. The government is completely tapped out. The world is completely tapped out on debt. They can only kick the can so much longer until there will be pain. There's no scenario that's possible to avoid pain in a credit crisis. Sure, they can kick it another year, but it's going to come due. So if they lower rates now at this point, let's say they do some sort of quantitative easing or they cut rates, it's just going to make the bubble even bigger, and it's going to prolong the pain that needs to happen to reset the economy.
So they've been doing that for 20 years. So they can't do another 5.
I mean, they can. I don't think it's sustainable. I think there's going to eventually be some sort of crack and crisis that's going to be a big price reset for both stocks and real estate. Especially true for stocks. Like when you look at stocks on a PE ratio, historically, they're overpriced by about 40%, according to the mean. And when you study history, there's always mean reversion. So we don't know when mean reversion will occur, but it always happens. It's the same thing with real estate in Jacksonville. Depending on how you cut it, according to their historical norm and for affordability factors, prices here are still overpriced by 31 to 39%. We will have mean reversion. I can't tell you when, and I can't tell you what will cause it, but it will happen. I don't know. Could be 1 year, could be next year, could be 3 years, could be 5 years. I do think it will be in the next 5 years where we'll have some sort of event that'll bring prices down. You know, not all at once. In real estate, it's an illiquid asset, so it does take time to go down. You know, from 2008 to 2012, you know, is 4 years until prices really started settling out and hitting bottom. It'll be the same this time around, at least in the state of Florida. But for stocks, it's very rapid and it's very painful. In a very short period of time, they sell off within a few weeks, just like we saw. We had a 20% sell off and then we had a 20% boom back. That could just be, you know, a bounce, a temporary bounce, and all the upside is priced in and we could see our way back down. But once the stock prices go down again, it really hurts Florida because we have a lot of retirees who are terrified of losing their 401k and turning into a 301k. So if we see stocks come down from here, they're screwed. I mean, the whole thing is just going to come to a halt. Transactions slow down. People become fearful. The house sells for a little bit less. That becomes the next one for the appraisal. And then you're just starting to see this type of spiral. And we know, studying history, that when the market goes down so drastically, it continues for some time. Once the sentiment has changed, it takes a long time for the sentiment to come back. The consumer in Jacksonville and the consumer in Florida, their sentiment's now negative. They are no longer highly motivated to purchase real estate at today's prices and interest rates. They are very cautious. Their motivation is waning, and they're always asking questions. And the cancellation rate is now 35%.
Wow, that's pretty high. That's crazy.
People going under contract to canceling. So we are seeing that across the board. People are scared, and I think that's just the sentiment is the number one thing that drives whether or not someone's motivated to purchase a home. And right now, the sentiment's falling out. Right. I think it'll eventually hit you guys, Dylan, Mike. Dan, where you guys are at as well. I think it comes for everyone. When you see sort of like an extreme scenario, correlations all go to one across.
And Florida usually leads some of that mean too, reversion, both in ups and downs.
Yeah, we have a boom bust cycle here, so it's normal for us. When we look at the charts, it happens every 10 to 20 years, where we can see up to a 20 to 30% decline.
Can that mean reversion in your context though? Can it actually revert over a longer period of time with zero growth or even just minor decreases? Or are you saying we need to drop 30% in 4 years, so every year over year? Because it feels like in some markets, like even where Mike and I live, like 2008 was not a good thing, but it didn't like crush us, right? We're kind of in like a temperate market. And so for a lot of these markets, could it mean reversion? Which I agree with you on that theory. I do think you get fucking average growth because you have big years and little years, not the same growth every year. And so could that be 0% growth, maybe 3-4% decline over a longer period of time?
No, the only way that we would have growth in Florida is we continue to have massive waves of people migrating to Florida with high incomes, or the people here would have to have higher wages. Those are the only two ways for prices to continue to move up because it's an affordability crisis.
Okay. So you're saying this in context of Florida only, like you wouldn't necessarily see a massive short-term mean reversion in, say, Washington or Ohio, where we're all at?
Yeah, so there's charts, and I have it on my YouTube channel. You guys can check it out. I have all the charts that kind of show the areas that are doing really well and really poorly. Arizona is starting to struggle. Texas is obviously one of the main issues. North Carolina, around Raleigh, Durham, RDU Triangle, all these places where people moved to and had population growth from COVID, we're now experiencing inverse COVID. And the places that people came from that hurt during COVID are now going actually back up.
They're like, this place ain't that cool, man. It's kind of sucks.
Dude, people are moving out of Florida. I'm telling you. So like, we have people that we know that have lost their jobs and they're used to having their New York income of $300,000, $400,000 a year. And they're doing remote work in Florida. They're getting fired or they're getting called back to work, to work in office. And that is destroying a lot of these people who are thinking they could have the best of both worlds by living, in Florida, but having the income of the North.
Yeah. Wow. That's interesting. I mean, that's very similar to what I would say we are seeing here in Washington, but it's kind of the opposite. We had a ton of people that were fleeing the blue state of Washington, right, to go to like Idaho, trying to, so they're going down to Boise, they were going to the Panhandle, but now like those markets suck versus Washington State where things are rocking. But here we do generally have a high income, and even like on the lower end of the totem pole, we have a very high minimum wage. Minimum wage here is $16.66. And so you get a bunch of kids that are in the same house, right, that are renting, all making minimum wage plus or $20 an hour. They can actually afford rent in like a decent place, right, with their roommates like they're doing. And so starting to see that on the home affordability side as well. And I know that there's like this massive like credit card crisis and everything else, which I'm sure exists. But even then, if you look at that, I would be fascinated to see that from like a geographic perspective.
Yeah.
Right.
Oh, there's charts on that. I can send it to you guys after this.
Yeah, I would love to see it because like if I, the numbers that Dylan sent over, what does it say here, Dylan? 11.12% of cardholders are making just minimum payments or are basically,
which is like 2% higher than the previous year. Yeah.
Yeah, but like, is that like all localized in a single place? Like, how does that distributed based off of income in these different states?
Yeah, it's a good follow-up question. But the crux of that is delinquencies on credit cards are at a 12-year high.
Yeah, for sure, which is, a larger overall issue. But I feel like now more than ever, real estate is such a localized thing, because ultimately what it comes down to is the affordability crisis. But if you have places where people can afford stuff, you're not going to have the same crisis with real estate like you would, somewhere where people don't make any money, such as Florida, where most people are like retirees, or Arizona, same thing.
Yep.
But the other thing to talk about too that's draining the capital from the consumer is these student loans restarting.
Yeah, that'll be huge.
And we've had deals fall through on the mortgage side where, they're like, oh, it's restarted and my credit got hit 150 points. And the thing is, like, a lot of these people are co-borrowing. Their parents get hit 150 points too. Oh, and now their mortgage rate's up in the 8% because their credit sucks. And they're just like completely priced out of the market. And today we just saw the 10-year treasury crack 4.5%. I mean, this entire real estate asset class is dependent on the 10-year treasury rate. And so over the last 40 years, we've seen it drop from 15% all the way basically to near zero. And now it's up to 4.5%. So that was a 40-year kind of swing. And there's no guarantee that it's going to come back down. I know a lot of people are praying, oh, rates need to come back down, I just don't see it, like to Dylan's point, like, if they're going to start cutting rates and all this stuff, until the employment situation gets really bad, I don't see a reason why the Fed would reduce rates at this point, unless they're just going to pump the
inflation
bubble
just
even
came
bigger
in
than
under
it is.
Expectations today, which like that's the other thing. If you're going to lower interest rates, you're worried about inflation. So it's like these dual mandates that the Fed has. But to clarify, John, I'm on the same point as you. I was trying to play devil's advocate of like the people in charge of the monetary system and Congress are going to do everything in their power to try to keep it going. Whether that's more QE, whether that's stimmy checks that they used to do, like all this kind of stuff that they're change the debt to income requirements, like all this stuff. Like they'll pull every trick they can out of the hat. So, but no one knows the timing. That's the biggest thing. It's the timing to
this. Yeah. So,
well, my thing was my wife and I are like, what do we do with all of our cash? Like we've got a bunch of investments. Like, do we put it in? Do we keep buying real estate? Do we put it in stocks? Well, stocks are overpriced. Real estate's overpriced. Do we put it in treasuries? Well, yields are going up, right?
Down.
So treasury prices are going down. It's like, where do you put your capital? Because let's say we have a good stock market for 10% next year, 10% the next year, and then it drops 40%. That's still like crap returns for 3 years. So you just don't know when it's going to hit. So we're just kind of sitting on the sidelines, waiting and watching and being really careful. In the meantime, we're doing private lending to real estate agents for fix and flips and making about 12%, 15% returns on that, which we're happy to be, like low balance real estate deals where if prices really do come down 15, 20, 30%, we're still okay.
3 of the 4 people on this panel now lend.
But it's hard to find.
Yeah, totally.
Let's go, buddy.
I mean, and especially for real estate people, lending is a very attractive option because it's still in the knowledge base that you've come to know from flipping and buying houses over the last however long. And you're in a levered position from the beginning. If you lend correctly, if you lend like a dummy, you can still put yourself in a stupid spot. Right. And it is a high yield return that should be on a short-term timeline, being under 12 months. And so it's from a cash flow perspective, it is very attractive, but obviously you need to have money to be able to do it. You need to understand underwriting, and you need to not be like a lot of the rookie lenders that I know you and I both know that are going and making stupid decisions and lending to people without checking credit or
don't know shit about what they're doing,
or don't know shit about what they're doing. So if one goes sideways, they lose their ass. It was funny on our GoPod call the other week. One of our other guys, he was like, "I keep hearing about these guys that are losing their ass in lending. Like what do you think that is?" And John just goes, "Because they're a bunch of idiots."
Yeah,
like honestly, because they just make and some of these guys talk to like, "Well, it was a contractor who's done a bunch of work for me, and he really wanted to flip a house himself, so I just wrote him a $300,000 check." Like, shit, he fucking stole your money, dude. Like, I won't even like give him a check for the work that I'm 95% sure they did until I verify it myself. Because there's the one-off chance
you someone else's house.
Something happened in their personal life.
No shit. Exactly. Jesus.
But so,
fascinating.
And that is a great question though. I think everyone is dealing with right now, John, because for the 11 and a bit % of people that, are living off of credit card minimum payments, for all of the Section 8 people that are going to be losing their stipends since Trump is apparently canceling that.
It's going back to the states.
All the people that are really struggling to get by.
You got both sides of the argument.
Whatever.
The state get funding for it. The state, we just did a YouTube video on that. And where's the state going to get the money for that?
Good question.
Hopefully it's not more property taxes. Those are already too high.
Not in Florida, dude. They're getting rid of them. The answer is the state's not going to do it, and it's just an excuse to get rid of it.
Of course. Of course. But, amongst all those people, though, there are those of us that are doing pretty well that, or have done well over the past couple of years. And the question is, how do you invest in your business? How do you invest with like your surplus cash as an individual? And I think in my opinion, I think the key question, the key answer there, John, is patience, right? Is you probably don't know. And I think that people that have only really been entrepreneurs for like the last 5-ish years, you kind of have this drive to always be pushing, but sometimes it does make sense,
right? Yeah. You always want to be deployed. You don't want to be waiting on the sidelines, right?
Yeah, totally. And you're worried about like inflation or whatever, but if you can have $1 million in the bank and you do nothing for 5 years, but then 5 years from now, you do a deal where you use that $1 million to make another $1 million, that's a 20% APR for the previous 5 years, right? And a lot of people don't think that way because it's not a guarantee, I guess, but also so is growth. Growth is not a guarantee either.
I think the only challenge with that argument to devil's advocate is like, then when is enough? Like when have you waited enough? Because like we're in a time where sentiment's like pretty upside down. If you were to ask me, I mean, there's still people out there that have like a bull mentality, like, hey, I'm all in. And they're the ones that are continuously trying to chase alpha and make these great, big, giant swings. But like sentiment's like, when do you go back in? Because you don't really ever know when it's at the bottom or the top, right? And you have the same exact uncertainty when it's at the top as you do when it's at the bottom. You're looking at it, you're like, this like wave can't go forever. I better pull my money. I kind of like you did, John. Like, and some people time it really well, right? And then But you don't know, because Mike and I also know guys that left the business in 2021 and they missed out on multiple seven figures because they were already established businesses, but
they're a little early.
They're a little early. And so you never know. It's like, when is that sweet spot? Because at some point in time, you have to deploy your capital doing something.
Yeah. Well, this is the getting rich versus staying rich argument, Dave, right? Because like back in 2020, when everyone here locally was pulling out and you and me went full on into the business, we really didn't have anything to lose.
Right.
Whereas like all the people that left, they kind of did, and this, I guarantee you there will be something that people right now will figure out where they will go and make millions of dollars or tens of millions of dollars over the next couple of years, because that happens every time that there's volatility.
Totally. And that's a good point, because you can't benchmark yourself off of the edge case either. Like, well, that guy did it and he came out on top and was like perfectly timed. It's like the guy who perfectly timed it might also be like, I got fucking lucky.
Right.
Yeah, totally.
Like,
they do. I mean, we all thought the sky was falling in 2020,
right?
For a couple of months. We're like, oh my God, we're going to lose everything we built, within a couple months. And then it came roaring back. So, there's one of the local investor here who had like 12,000 properties, single family properties, got under contract in 2020, and then COVID hit and the deal fell through. It thankfully, because he sold it again in late 2021 for like $50 million more, the exact same properties to the same buyer.
That's the same buyer. That's nuts.
That's so crazy.
No, I was going to say, like, not only with the staying rich versus getting rich, but like when you guys came into the wholesaling in 2019, 2020, the minimum bar is higher than it was the previous 5 years. And that's going to be the same for the next 5 years. And so like, if that is like, you don't know any other standard. So like when you're just starting, you're like, well, I guess this is how it is. Versus if you're 5 years into it, like, I don't want to work any harder and make less money. So like, that's also some of the reasons.
You're right. Yeah.
Well, and also if you really want to like have major growth in a short period of time, meaning like not your entire life, you do kind of need to bet the farm.
You do,
right? If you want to make tens of millions of dollars earlier in your life and you have a couple $1 million, you kind of need to bet that couple $1 million. You're not going to grow $2 million to $20 million in your 30s or 40s if you don't really push things out there. You're not going to do that by just getting a 9 or 10% preferred return every single year. It just mathematically won't happen.
You're right.
Right. And so for those that were starting, Dan, you and me were betting tens of thousands of dollars to start that we turned into millions in 2020 and 2021.
Now we have to be willing to bet millions to make tens or hundreds of millions.
I thought you were going to say tens of hundreds of thousands.
Totally.
No, come on, 10x that shit. You know what
sometimes it does feel that way, not gonna lie. But
seriously.
And those are just things that everyone has to consider for themselves. That's the personal question and the risk that you're willing to take with it.
Did you guys, unless you got something else on that, do you see that bonus depreciation 100% might be coming back?
I did see that. I saw that.
I feel like we've been talking about how it might be coming.
Well, they
back
just
for a
issued
long
like their
time.
formal agenda. Like yesterday? Yeah,
it's in the proposal.
And the 2025 rate was supposed to be 40%, and this is retroactive to January 20th of 2025. And I mean, I'm buying 4 rentals next week.
So how does that help?
Like, that's good news for me.
Yep. How does that help? Like, I'm not trying to be facetious here. Like, how does that help? Like our investors that are listening.
I think it helps anyone that's a buy and hold investor. Honestly, the perfect scenario is someone who has a high W.
What if you're poor and you don't make
if you have a high W-2, like a spouse, and you can qualify as a real estate professional, and then you can reduce some of your spouse's income. That's the number one candidate for someone like this.
Right.
But I mean, that kind of fits my scenario. So.
Yeah, but I mean, you're still going to want to sell the properties eventually, don't you?
Yeah, at a reduced rate. Anyway. What's the depreciation recapture is like 20-25%?
25%.
You say that right now all smugly, but wait.
I've sold properties, Mike. I know you have to pay it, but
it sucks.
But because I mean, I know a lot of guys that were doing that accelerated depreciation in like 21, 22 on some of these big multifamilies they were buying. And tell you what, now that they're really having to get out of them because their rates adjusted and they went up, and now they're selling them at like a loss.
Those are the people who did they risk their own money, or are these the GPs who are just committing fraud or were idiots?
Probably
who
both.
Took LP money.
Yeah, probably both.
That is the key question, isn't it? I think
I will say this though, like I asked that because where Mike and I stand on this, because Mike and I don't love anything long enough to own it more than 5 years anyhow. But like we were having a discussion about this on a buy and hold here in town, and it was like, oh, all the tax benefits will be so awesome. Like, it's going to save you $300 annually in taxes to own kind of an okay house. Like, fuck that. I don't want to own a shitty house for $300 in true tax benefits. So it's like people get so wrapped up around the idea of like, well, I'll have all this depreciation. And it's just like, you have to be in the right position. And I think if you are like in your situation, John, if you're running like a brokerage, you have high cash flow, high income, and you're able to like write it off, and you're a long-term person, like you're thinking like about your portfolio in like a 10, 15-year timeline, it makes a lot of sense to be able to access that, assuming you're having a higher than usual income during this year, unless you want to just keep buying and buying and buying just for the tax.
The hamster wheel
does
kind of like catch up. Yeah.
It's kind of an unsustainable thing. Yeah.
I don't know. I like being a private lender, guys. I don't like owning any assets. So I sleep well at night. I get cash flow on the first of each month. It's awesome. So, but when like you're saying, like, when's the right time to buy? When's the right time to go back into the market? It's when it's mean reverted or a little bit more. I mean, you're not going to hit the bottom exactly, but the ratios are going to say, hey, like, now is the time to buy. Right now, the ratios are saying the exact opposite. And it can last quite a while, but eventually it will come back down. So, if you can get in, at the bottom of 2020 or the bottom of 2009 in terms of stocks, and stocks have outperformed real estate pretty heavily if you actually look at the numbers. And there's some guys in the abundance, Mike, that are like, oh, if I had just like closed my flipping business and put all my money into stocks, I'd be like worth 10x more than if I was, stayed flipping and doing all the work. And so it's interesting to look. So you want to have, once you have money, you want to look at it a little bit differently than if you don't have money. Obviously, you don't have money, you need to borrow from a private lender and keep the flipping and the wholesaling business going. But if you already have money, you play the game completely differently than when you start.
Right. Yeah, for sure. And it's important to have realistic views on the gains that you can expect, or, both realistic about what your actual risk is.
Totally.
That's a big thing that I think people, when they don't have any money, that they tend to worry, I would say over worry about, is if you lose your $30,000 that you have, like, yeah, that sucks. But also just one good win in real estate can recover all that money right away, versus if you're risking $3 million, it's still going to take a little bit to get back regardless of how good you are. Right.
Totally.
So, awesome. Well, John, buddy, we're here to wrap up. I know you need to go pick up your kids from school and stuff, so we'll let you go here. Before we do, I know you started doing some stuff on YouTube and you've been off to a great start. You want to talk about that a little bit?
Sure. Yeah. I mean, I guess I'm a doomsday real estate guy on YouTube, so you can click all my clickbait stuff on, it's called Think Big, Question Everything, which is my Substack. So I have a Substack newsletter that you have like 30,000 subscribers to. And I recently created a YouTube channel. So I collect charts. Like, I'm a chart junkie. I like to look at the data. And so I just do a YouTube channel where I go over charts that I found during the week that I think are interesting, or topics that I think are interesting. And so far, so good. And if you want to follow, you can do it. It's the real Jon Brooks, Jon Brooks. And you can go ahead and subscribe, or you can follow me on Instagram at I am Jon Brooks. Very responsive, happy to connect. If you need anything in real estate for Florida or Georgia, I am your guy. I can get you connected with the top of the top, the best agents that actually know how to navigate this market, know how to negotiate, and how to get things done for you. Feel free to reach out and I can get you connected into our ecosystem.
Awesome, John. Well, thanks for all that, buddy. And then obviously, if you're listening to this show, you are a fan of no BS real estate talk and people that actually know what they're doing. And if you can't tell, John is kind of one of those guys. Fits our profile, really good buddy of mine. And there's a reason that me and him have connected so well in the very short time that we've known each other. So awesome, guys. We appreciate you all for listening. John, thanks for coming on the show. And we'll talk to you guys next week.
See y'all.